All right. It is Tuesday, September 13th. September 13th. February 13th. The day before everyone gives their heart out. The market eats their heart out. Ain't that crazy? Welcome to another session. Y'all know anybody that's supposed to be trading and be struggling with the concepts? Your time to trade is here. 10:30. Anything before that on this side, that's not for you. So let's just take it to the simplest of approaches that we've seen. So let's just follow this market structure real quick. That high we put in, right? We drop it and put in another low. High we put in, right? We drop it and we put in another low. High we put in, right? We drop in, put in another low. But do we? Trade it right up above this previous high. And what ended up happening? Where do we go back to? Violate that high, right? In video 6, the free masterclass playlist. Free. Now the market review that everybody going crazy about because it is not there. Sorry, video 5. Video 5. We got the S&D responsible for the run of this high to the left. Market open. Tossed us up above that high. And we tap back into here. And you saw that push. And traded up off of it. Multiple opportunities within here. The 1-to-1 that came out of the zone there. Multiple opportunities within here to be able to find yourself on the right side of the market. So this is why it's important to have the knowledge of the playlist readily available for you to use in your brain in terms of your decision making. Because you trading anything for any other reason is a surefire recipe to get cooked. Let me just go over here real quick. Look at, I don't know where this low is from. This 496. I don't know where that's from. But could see a bounce around there. Why would this change that if I just... That's for ES. Russell and YM. So guys, with this here, the most basic understanding for this happening, for price running up into that, the most basic understanding of that is obviously the CPI report was released. Interest rates, right? A lot of the bank stocks are on YM. I think you get a few on Russell too. ES is obviously being moved down in that same direction, right? As the other two. While NQ had a push into the opposite direction. So just on that alone, you understand back in March, or I think it was April, is when I started trading NQ of last year during the bank failures. And the reason why was because YM started to consolidate a lot, and NQ started to have a lot more movement, a lot more volatility to it. And that had a lot to do with rotation, right? Moving money out of bank stocks and putting it into tech. So you saw a huge rotation of, outflow of bank stocks, followed by inflow of money going into tech stocks. If you even look at the market structure at the time, around here. Yeah. So look at this. While we were here on YM heading into from February into March in this price action, look at what NQ was doing. We were in here on YM, and the same area that YM was in over here, you see that NQ is just moving up in that direction as YM was moving sideways. So I have paused trading this. I mainly taught on this all the time. I paused trading this, and I went over to NQ. And ever since then, I haven't stopped trading NQ. But obviously, with rates going higher, that means that what? We're going to have more, say it with me, y'all, bank failures. Not that the dollar is crashing and people want to get their money out of it. Please, don't even talk to you about those narratives. Hey, listen, I had told a group, I said, I was with Premium for CPI. I told them that we're going to fill the rest of this imbalance if we get back into it. So the rest of the imbalance is right there at 715. And this is Dave Rape, by the way. So this entire thing is on one video that we've went into depth with this. But then the problem is people take a bunch of other concepts and think they could use it all together. And then now they're conflicted because that's dropping, that's moving, and that's consolidating. And Russell just acting up. There's the cousin who both parents, they, I don't know what's going on over there. He's just spending a couple summers with y'all because whatever is happening. But you have to watch. You have to watch your own chart, right? Your own chart. And pay attention to what price is doing based on the concepts that's been taught to you. The concepts that all of us have access to. And we trade within that. So look at this. Look at this. Let me just go back to the bare bones of it. We have this S&D responsible, right? You see us trade up, put a new high, right? I taught you guys over the weekend. I said the lows that facilitate putting in a new high, that is what you want to look to long off of. So if that means you got to wait while all of this is happening just to be able to get you into your zone, into the 50% of the down move or whatever it is, You wait for that. And your opportunity is there. And what do we see? Market move over it again. Which stops right behind the low of it. So the stuff that I teach is not interpretive. It's not, I'm trying to make sure that I'm on the correct side of this because here's what's happening and I want to just triple check what I'm doing. No, you're slowing yourself down. You learned that already in the coursework. It's time to go back test. You learned that already. It's time to go back test. You were told that this is how you follow it. It's time for you to back test. It's time for you to get past, isn't that good? No. You're done with that. At least you were supposed to be done with that before you joined here. But you're done with that. Now it's going into the charts and seeing it happen over and 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 over. And when you're paying yourself, you're paying yourself over and over and over. And when you're using a stop loss, you're using a stop loss over and over and over and over. When it's time to back test, that one entry that you were told to back test, that one way that you over and over and over, so you're sure beyond a shadow of a doubt, and nobody that's trading on the other side of the market can tell you a damn thing because you already saw it in back testing. You already found it. You already came to the conclusion that this is it. And no one can change your mind. I don't hear nobody. Nobody. Target filled could change your mind. Now, imbalance is the concept that I know ICT is heavy in. He introduced to a lot of people, or at least he didn't create it, of course, but his work thrives around that. When ICT came to my stream, I was telling him which imbalances would fill, while he was telling me, be careful that the Fed is speaking and the Fed is going to just jawbone and they're going to send price everywhere, all over the... Thank you, sir. I love what you do. I'll take it from here. Because I saw it over and over and over and over again. And not even him, as great of a trader and a teacher that he is, could change my mind about my analysis and what I was anticipating. That's back in, what, September, I think it was? No one can shake me out of what I see other than my stop loss. That's my invalidation point. My stop. Not you trading the other way. Somebody got to lose. And boy, do I hate losing. So I know this happened before 10:30. And I understand, you know, there's some people who they choose to follow the rules and won't trade before 10:30. They're still waiting on stuff. Obviously, we're going to be able to observe price together. The ES bounce? Oh, yeah. It's very, very, very important that you guys follow your own analysis. I had someone in premium today who I may be asking him to exit premium. Say that he was going to ask me for my entries to see how I execute. First of all, if you coming in with that kind of question in premium, you should not upgrade, or else you will be removed from the group. Because comparison is the issue for a lot of you guys that are here. Comparison. You are comparing yourself to people who have more knowledge than you and who's desensitized to certain kinds of price action after losing so much. They've developed a way to manage their emotions in their trade, and you're trying to chase after their trade. And you do not have the same perspective that they do. You do not have the same understanding that they do. You do not have the same risk tolerance that they do. Yet you're trying to follow their entries. Fool! You need to know beyond the shadow of a doubt that you see what's happening and that you are following what's occurring in price, and that you know that because you've seen this before, you're going to trust it because you saw it. Not because Shaz takes it, not because Stoic takes that trade, not because it's a way that I enter, but it's because you saw it when you were in the lab, when you were back testing. You. And some of y'all are slowing your journey down. Slowing your journey down because you think you know better. You will mentor yourself since you think you know better. Because had I watched anybody when I first started trading, had I listened to what people were saying, I would still be unprofitable to this day. I came up with every day as a trading day because when I came on Twitter, they told me every day wasn't. They told me the continuum vortex of the math within all these different crazy things. They were speaking in Sibiite and Bissiite. And I was a gambler if I did anything else other than what they thought I should be doing. And that's why that became a thing. Every day's a trading day. Every day's a profitable day. It's a blessing to be on the right side of the market every day. Why? Because I follow my damn rules every day. There is never a day where I will reject the rules that I have because someone else is doing something else in the market. Never. And I'm trying to help y'all to develop the same thing. And y'all also worried about who trading what? Who's the person that's doing this, the person that's doing that. But their entries are helping me a lot. Margin call. I don't know what's wrong. I because the same thing that he enters on, I try to put my stop loss there, and they took it. And they took it. Unacceptable. And this was a textbook reason as to why you follow yourself. You follow what you see. So comparing yourself to other people because you want to shortcut the work because it feels tough for you. It's supposed to feel tough. Growth is uncomfortable. You don't like to feel uncomfortable? Leave. Growth is uncomfortable. The reason why you haven't is because you haven't got uncomfortable enough to grow. It doesn't feel good. But it is for the greater good of your future. So welcome to another narrative building session. Had to get that on my chest because comparison is the thief of profitability. For many people that's sitting in here now, it's the thief of you gaining some sense of profitability in this market. Because you keep comparing yourself to other people. Keep comparing your entries to other people's entries. Rather than going to find it the same way that they did. That's the only way you're going to survive. I saw somebody in the chat say, how many swings do we have? Perfect. Mwah. Great observation. How many swings do we have from the low? I think that was Obanique that said it. How many swings do we have from, because the rules are the rules, right? I don't care what was on the 5 minute up here. Was there some imbalance there that people be chasing like they lost their mind? No. We got into the 12-minute imbalance and there's still some inefficiency down below and there's some liquidity. The liquidity that's down there, and then the whole time you got a 1-to-1 up here waiting inside of this zone. But all the rest of liquidity that the book map showed you, that SMC showed you, that you're chasing that. And then you come to put it on someone who's telling you, do not use that stuff. Please trade what you see. And those who did, of course, there's their benefit. There's their enjoyment. There's their confidence from things they saw in backtesting, from things that they understood based on the material that they're taught with. How many swings from the low? Multi-time frame analysis approach? Yeah, well, I think I'm going to go and watch some Harmony Sword is a good... It was a good refresher to watch that after I already said, do not watch that. It does not go in depth. It's not going to help you. Maybe with basic framework, but it does not go in depth with multi-time frame analysis. You guys have all the videos that are here. Every single video you need. Now you just need rules. And if you don't have rules, you don't have knowledge. And if you don't have knowledge, you will never survive in a market that is unknown to you, that is uncertain to you. Never. So I don't care about your FVG that's supposed to be used as resistance for whatever. Everything that you've already been taught, you have at your fingertips, you have at your disposal. And it's up to you to use it. So that 1-to-1 is here. And this means that we are looking for delivery. And anything else that we get after the fact, we'll adjust to. But stick to the rules you've been given. Let's see where YM at. Still down in the dumps. ES ticking up slight a bit. Russell's still down there. Most of you guys' problems is not that you can't trade and you can't make money. You guys know how to trade. You guys know how to make money. You guys have a problem following your own rules and rules that others give you, right? We're going to be honest about that. And then the greed aspect. You're not paying yourself. What are you doing? How are you engaging in philanthropy before getting the money? Before getting it. Nothing wrong with philanthropy. Get the money first. Boy, I do again. So there's a 1-to-1 delivered to the left. If anybody actually was taught. Because people think 1-to-1s are now, why you should aim for a 1-to-3 because okay. And when you find profitability with that, then go and open up your own mentorship. So we're in this imbalance here. Let me see what time frame this is from. This is an up move, which I'm more or less looking for it to get back to at least the gap there at 41. But I do see we have this balance here, which I could at least be looking for the 70% because it's nearest to the zone. And we know around 11:30, that's when the range starts, and then we can understand how that ranging begins. And guys, look. If price wants to take this high right here, right? Then put in this low down here, right? When we are trading up above and when we're looking for this high, we already talked about 1. When we get nearest to the high, we trade away from it, right? But 2, we understand the S&D responsible approach, right? So we have to use our minds that if we're anticipating a high being ran, unless it's an imbalance running straight up to take that high, you should understand that the S&D responsible has to be created somewhere before the run of the high. And that'll keep you from jumping the gun thinking, yeah, you're just going to jump in and go for the high up there. You just going, you got no money to put in a new high, right? So when you're actually predicting You're not predicting the run of a high or the run of a low. You're predicting order flow, the delivery of it. The delivery. And you trade within the delivery of price. And you find a little more success in that. So it's 10:43. We know range is about to show up soon. And oftentimes what you see is we range around one candle. So I'm waiting to see at least the creation of that. Hi, Dave. Which string are you using to draw the 1-to-1? There's only one. There's no other swing that you got a 1-to-1 on. There's only one. If it's in the 1 hour time frame, then you'll find the 1-to-1 there. But if it's not there, then it's not the 1 hour time frame. This is why we show up to take notes. It will be in this video when you rewind it and play it. But I'm not here to tell people what I'm drawing what from and who's who. You should have been back testing already. You should have been following the what I was talking about when I was flickering through those time frames. Hopefully you weren't trading through that. Let me see. Did that go above it? No. I don't quite think it's this anyway, but like I said, let's see when we get near that above. It's him playing with this hocus pocus. Really just some short TikToks. Yeah, I think that might be what some people need. How to get your stop loss hit fast. I can explain this to you in 1 minute. So you could lose 20 years worth of savings in this 1 minute video. Here we go. Buckle up. Y'all listen, we all been there. Y'all hear Jimmy. So Jimmy's in the building. Y'all know Jimmy. That's Forget Bias, Make Money. You see his name? Forget Bias, Make Money. That's what I told him. He always had a bias that was short. Why? I don't know. But when we first met, I said, Jimmy, you need to forget. Doesn't matter what your bias is. Don't use that. The market doesn't follow your bias. The market follows what it's doing. You want to be right or you want to make money? I was saying all the time. You want to be right or you want to make money? Because you don't have to be right about it going all the way to a high or all the way to a low to make money in that particular, occurrence. You don't have to be right about it. I told you guys, Jimmy would take a couple $100 to like $6,000-$7,000 sometimes, and then blow it all away just like that. Give it right back to. I personally believe that he was taking a loan from the market makers and then paying it back with interest, with his margin. I personally believe that he had to be into some, you was swapping with them, something like that. I don't even know. But he could make money. He just couldn't hold on to it. And now, Jimmy, show them the picture you showed us at Premium. Mind you, he still shorts, by the way. He's short at the top. He's short at the top of up here. I don't know if that was on an eval or the funded, but he's short at the top up here. And then just went to go buy another one after. Okay, so let me take these out. So this is more than likely what it looked like it's coming down to. You sweep there, tap into there, have a move back into that range. Because that's accumulating that's happening. So you could end up getting something like that to move back into there. Back into there like that. So, but we still have price looking to get back into here. So however it is they, make that pivot happen, it'll be from somewhere up here. There you go. Jimmy posted it. Don't laugh, please. He always used to give his money away. What are you? And he was trading with his own funds on crypto, super leveraged. What are you doing? Pay yourself. I even told him one day, he was up like $4,000. I said, Jimmy, go back to the original margin you started with and build it back up. Pay yourself. He said, okay, Mr. Dave, I'm going to follow exactly what you said. Within hours. Yeet. Within hours. Many of you guys here is just like who Jimmy used to be before he was reformed. And it's because being trapped into this idea that you have to be in the move taking the high. You have to be in the move doing X, Y, and Z. It has to. I watched it go near his take profit. And because of a couple dollars away, it went all the way back to his stop loss. All the way back. And then some. He said it blew past his stop loss and didn't even take. Right here in the same server that a lot of you guys are hearing. In fact, you guys know who Jimmy is? Jimmy is the person that was asking me in video 4 about the market makers. And I was telling him, yeah, I heard of that, but I don't even know. I don't know, man. It's asking me about Traders Reality, all these other people that's there. Yeah, they manipulate them. I said, Jimmy, I don't even know. His name wasn't even Jimmy on YouTube. I said, hey, listen, I don't even know what all of that is. I couldn't tell you. I can tell you what any that is, but here's what I do when I go into. That's how long Jimmy has been around. And the further and further he went away from the rules, the worse things got. The last time I spoke to him, he lost all of his money. He lost his savings on top of any other profit that he made. I think he said it was $18,000. And he said, I'm a failure. I'll never get this. And then he exited the server. And I never heard from him again. And prior to him leaving, I said, Jimmy, you're not a failure. You just don't know how to follow the rules. That's it. You just have a hard time following the rules. You're not a failure. And he went on his way. And I kept teaching other people, only to see him come back on the live streams and hit me with updates. Yeah, I'm trading funded now and I'm doing this. But I'm going to make it. I'm going to make you proud. I'm coming back. And you look at his success. This was just, guys, mind you, this was just a couple months back. Oh, you lost 80K? I thought it was 18. Excuse me. Excuse me. Trading his own money. And he had to come to terms with, I need to follow the instructions. I need to follow the instructions. Dave, can you bring Jimmy live to talk? No, you need to follow your rules because you are just like Jimmy. You think you know better? Well, you are just like who he used to be. You think you know better? And you don't. You need to stick to the rules you were given months ago. And you too can do what Jimmy has done. It's no different than anybody else who had to come here and get cooked to learn. Why did they have to get cooked? I got cooked. That's how I learned. I got cooked. I lost $18,000 savings. Money that I didn't have to lose. $18,000. And watch my situation completely turn to, fecal matter. Playing with money I should not have played with. And the situation goes from bad to worse. The only thing that saved me was following the rules of the market. I didn't have a mentor, but I had an understanding in the market. I had an obligation to my family, to my friends. Let that load get cooked. I had an obligation to my family. And I let them down because I didn't follow the rules that I had. So this is where we are. Remember what I said about the range? This is it. Bottom of the range, this is the top of the range here. And many people might be here and they too did that and are ashamed to speak about it. But it was through my loss, not my shortcuts. It was through my loss, not my comparisons. It was through my loss. Through my loss that I was able to learn. Not from somebody else's charts, not from some other concept, not from an indicator, not from trying to avoid doing the work. That's it right there. If it extends any further, it could be here and then back up into there. But I have this at the bottom of the range. I had to learn through my loss. That wasn't reverse engineering somebody else's concepts, reverse engineering somebody else's entries. I only had a limited time to make it. Nobody could save me but me. Nobody. And I'm trying to help you guys to understand a lot faster than you need to, because some of y'all need to blow 1 million accounts and then get down to nothing and then fail out of here. And then later on, you come to the conclusion that you should have just listened after. I'm trying to stop that, because Jimmy was already that person, and that unnecessary hurt and pain he had to go through, put himself through, he didn't have to. He had somebody that was willing to lead him with the utmost passion to make sure that he made it. And he kept running into that wall that I told you guys about the other day. The door is to the left. Open the door. No, it's fine. I'm just going to run through the wall like Hammerhead. I can do it. I know how to. Okay. No worries. So, this guy is an example of that you can get back to that place. You can recover all losses. My mom always talking about the years of the cankerworm and the palmer worm. The stole from. Okay, Mom. So I'm going to put it this way. The fees you've paid, the money you've given away when you prematurely became a philanthropist, I thought y'all was going back into the rain, right? You can get it all back if you just follow the rules. Just follow the instructions. I'm telling y'all not to compare. You want to compare. I'm telling y'all to back test. You want to forward test. I'm telling y'all to watch the videos and take notes. You think your brain can hold it. Because I've seen how it's created successful students. I've seen it with my own two yay. Me see it. And it can change for you too. If you just slow down. Everybody's living life in a rush. And that's what I realized on the other side of the market humbling me. That I was just in a rush. I could do it. And I didn't have to go through all of that pain just to get there. But I was in a rush. And it was the rush that robbed me. So look, when we're in a range, let's say we begin to run back this way, right? You need to understand that you're not using whatever up move and up candle that's there to hold and say price is going to go down further again. When you're in a range, you're anticipating. That's why I said let the low get cooked, right? You're anticipating the lows getting taken, the highs getting taken, and then trading back into the range. And should we end up going back down here again, you're anticipating the low to get taken and then go back up and then the high get taken. You're not looking to be the order that holds price on the zone. You're expecting price to violate what's there and go back into the range. Violate what's there and then go back into the range. By the little principles that I gave you guys was longs at the bottom of the range, short at the top of the range. And pay yourself. Don't forget to do that. You don't need to hear your take profit get hit. Sorry, let me move this. You don't need to hear your take profit get hit at the high of you knew was going to go and take out buy side. You don't need to hear that because you hear your stop loss get hit more than you hear your take profit get hit. So get that out of your mind and trade within what price is giving you. And according to the rules that you're given the trade with. So Jimmy could have used all his money, y'all, to buy multiple funded accounts and hedge against that. But he had to learn the message on his own. And he was able to turn it around. Because me, as a mentor, I did that for myself. I turned it around with nothing. Nothing at all. Nothing left. The same thing that prop firm CEOs tell y'all. You can't become profitable with $1,000. It's best to just do this and that. Yes, you can. I have 5 stones. 6 because it was $600. And I had to slay those internal demons. The greed that I always had my whole life. The selfishness, the stubbornness. I only had that. Had to slay it. And it was either I was willing to answer the call, I was willing to watch it fall. Whatever it is, your choice. Answer the call or watch it fall. Your choice. Because I can't do the work for you. Stoic can't do it for you. Shaz can't do it for you. A gazillion hours of content can't do it for you. It has to be you and what you know, and the final product of it is you pushing the button on your plan. Push the damn button on your plan. And again, it's up to you. So I don't know who I'm talking to in here. Somebody, I'm sure. Let me just look at the higher time frame, see what we got here. We haven't taken that high yet. I'm at least looking for us to get up above this. And potentially above that 82. Now I saw a brother in the chat post that said, "What do you think about this?" And I did not answer it because I told him what I thought about what was about to happen. So I'm not thinking about his analysis and what he can't find consistency with. I'm talking about the things that I've found to work out and the things that I build in the own narrative of price that I look to take entries in. Not your analysis. So I thought nothing of it because either way, most people would chase that to short when it's right back in your face and back to your break even. Or maybe going to run your stop if you stubborn. So we are in a range. And we mentioned that this is how ranges move. Would you start counting swings after the flip? I think you need to watch the back testing session. You asking questions that I don't. You asking questions that should not be asked while we're trading live. So, remember that zone here? That everybody's like, oh, it has to hold. Right? Did it give the 1-to-1? Yes. And those who were greedy? Yeet. Because we're not looking for zones to hold. No, this S&D I wasn't identifying this as the bottom of the range. This is an imbalance that's inside of here. And within this imbalance, right within here, we know that those higher time frame imbalances can move us back into that previous range, right? But as I mentioned, usually around 10:45, 11 o'clock or so, we enter into a range. I'd say that almost every session. We enter into a range. So range trading is that it's not deviating too far from the highs and the lows of that range. So the very first thing that you anticipate within range trading is for lows not to hold and we trade back in. For highs not to hold and we trade back in. And should it end up trading back into here and going back up again, not to hold and trade back into here. And should we end up trading below here and going down, lows not to hold and trade back within here. And in order for you guys to fully understand that, guess what? You're not going to learn all of that here in this session. You're going to learn that through back testing. We're going to cook this low. Is there a down candle there? is so if it takes out this low, taps back into here, provides a 1-to-1 up here. Zones give reactions, don't often hold, which is why 1-to-1 is optimal for consistency. 1-to-1 is optimal for you to make money because you don't have enough experience to hold longer. Most of you guys choose random zones and just hope that it holds. So in your hoping, more than likely, you will be able to achieve a 1-to-1 from your zone with knowing the bare minimum to trade. And if you follow that, you can find consistency very early on as you are learning. That's why we call it earn and learn. Because some of you guys try to hold stuff longer than your experience can hold it. You have not been in a trade that's done this. You're not successful in backtesting with this particular way of trading. So it's important that you honor that experience and you trade within it. And you'd find more success or more consistency on the other side of that, following those rules, than to try to think you can do more. And anytime you try to get more, anytime you try to do more, anytime you try to fatten yourself up on more, you always get margin call. Not you, by the way. I'm just talking to people in general. You always get margin call. Hey, beautiful, Ziga. You right there. Beautiful. I'm telling you, one contract, that's enough. One contract. And I don't know why people try to trade more than that, but one contract and that's enough. Some of y'all got to really think about it. If I took one contract and I made what? 5 points on it? It's $20 per point. If I took one contract and made 5 points on it, it's $100, right? If I took 4 to 5 trades with that same kind of system, on the other end of that, I'm up $400 or $500 on a single measly itty bitty teensy weensy contract. There's a couple scalps, and by the end of the week, if I can pull $300-400 in the day, by the end of the week, what does that end up amounting to? And you just do the same thing over and over and over and over and over and over and over, and you don't consider the money. The move is what you're paying attention to. Never the money. The move. You never consider the money. The move is on the other side of that. And if you can scrape up that kind of money by just trading the move. So now here we are below the 50% of it. So you would see if your 5-second model comes into play here. Taking out the low of this previous wick would be running a low. And if it trades up above the open, it would be, or trades up above this high that it just put in, it would be violating a high in there. That's just on wicks. So you wait for that. And anything down here, that's far more than enough. So you see, we didn't go back up to the open as of yet, or take out the high of the previous candle, but we took out this low here of that candle and put in a high prior to that. So a lot of the times you could see a flip on the seconds time frame within here to be able to trade up to what? There at least. But we want to see if this gives us that move back up into the range. And for those who are conservative, you can wait for price to get down into this. And should it continue to trade higher and go out of here, then you just missed that move because your risk tolerance around that. So there goes the high we mentioned there. That one there. I'm thinking I could get up above this one at 56, but we'll see. And there's a little imbalance in there that is being rejected out of, but I think we can still make its way up to that. And see, if you have no knowledge of the concepts and the stuff that's taught and how to use it, what the model is, which is the flip, which you're waiting on, you end up not being able to take part in any of these moves. I'm just watching at the moment because I'm not giving anything back. Well, I'm showing the 5 second. There was something there that you could have conceptualized as an entry. And if you're a person that's learning that, and you know that you took this from the higher time frame, your invalidation is behind here. Your entry is below the 50%. So even if you got in somewhere around here, your invalidation is back here. You're targeting the 1-to-1, and you would have probably already gotten a 1-to-1 leading out of there. And this is probably more like a 1-to-3 or so. But should price end up going into here, failing because of the trend line and dropping further down there was plenty of opportunities to be able to pay yourself on that side of the market. But if you don't back test enough, guess what? You're not even going to trust it. You're not even going to trust being able to find an entry within there if you don't backtest enough. I'm telling you, the biggest issue that people have is that they think they don't have to backtest. I heard a mentor open up one of his videos and he said, guys, you know I hate backtesting. So if that's your thing, then I think that you what? You what? You leading how many people? Somebody say, Shimon, Target Phil Yeeska beat. There's no rocket science to it. It's not interpretive. Things that I teach, it is what it is, period. It's either it is or it's not. It's either it did it or it didn't. And it's you that fumbles it. And you see why I targeted even within this? Because I said, there's a little phantom trend line there, right? Yes, that's a 1-to-1 that's up above here. But who am I to say that I can go up 26 points and I want to see the high get taken at 40 points? And now I'm belly up on the entry over. That's why I said, I know you can get 5 points. I know you can get 10 points. But some of y'all want to be right. You want to hear the TP hit at buy sign. And then the SL get hit. Boy. The sell side of the zone get clapped because you didn't. So we all just gotta learn how to pay yourself. I keep telling you all that. So seeing this here with a closure on the seconds time frame, we're ready to tap into the center of it. We'll see if it chooses to go in and eat this wick. I don't wrestle with the greed stuff anymore because I backtested enough to know that if I just kill that greed and follow whatever it is that I claim to be doing, whatever it is that I say I'm trading, if I just follow it, then I'll be all right. Just by following it, I'll be all right. I'll tell you, some people trade with Audacity. Audacity is thinking you could put in another high or another low. So let's see if it swipes this, it goes back for this. Might stop in that leftover area there. Looking a little heavy on that, so watch it. There's the wick tap within here. Let's put it there. Put the high there. How many seconds? 2 seconds left on this candle. Let's see if this runs the previous high. Of the candle. Doing one-to-ones. I'm done for the day. Hey, that's beautiful. Love to hear that. Honor your experience. Love to hear that. That's all I hear. Honor your experience. I know they hate that I'm tough, and they hate that I talk the way that I do. But you want to make money, right? You want to change your life, right? That didn't mean it to come with ego massages. It was going to come with, you need to be professional. It wasn't going to come with professionalism. This is to save your life. It gets muddy in here. I told them the strategy was memory, and they thought that said memory foam. I need to be as soft, I need to be as gentle as memory foam. No. We said memory. This is strategy, not memory foam. Maybe this other wig we tapping into. You have these previous highs up here. Remember what I said about these here? You can see that get cooked and I get cooked. You see us tapping to here. Move up to there. Never mind, they just wake that back up with the hand of okay, you got it, partner. You got it, my man. I'm moving too fast. Hey, beautiful Manga Bear, beautiful. And you see how we still in the 50% of this entry? This is how some of y'all fumble it. Because your whole idea is you're holding until here, right? You guys are cold shower people, right? No, that's not y'all. But the invalidation is behind here. Many times, this is the center of the range. I told you, if price is doing this inside of your entry, that's not something that you want to consider staying in. But if you are, you need to understand that you need to accept your stop loss right back behind there, and you need to consider that price could be looking for the 1-to-1 up there. And whatever your fate is, that's your fate. That's what you waited for. That's what you said you was going to wait for. You said you was going to wait for them to cook you? or you know, feed you, whichever one. Going through the 5 seconds, see what we got here. Now, if it goes back above this high, you can see it run for these, these, and then ultimately that one there. Mm-mm-mm. Crazy. They just wicking up above there. That you wouldn't see it close. Mm-mm-mm. Ooh. So what that's looking like is fractally, it looks like the same thing is happening. So look at this. You have that, right? Within that, and then you have that, right? Within that. But you also have that. Within that. Yeah. Hey, yo. And back to the 1 minute. Target, man. And I'm literally telling y'all, when we're bullish, prioritize bullish wicks when we're bullish. Oh, I did no, I said that in the video I released to y'all. When it comes to wicks and we're bullish, prioritize bullish wicks. Yeah, I was looking at that too. The failure to take a low. You're not shorting out of the center. Yeah, price can trade into the other high there and trade away from it, but then you also anticipate price taking that out too, right there. And this is why I put this above the wick here as the first high, and this one above this high right here. And if I may, y'all. Bottom of the range. Top of the range, right? I just keep saying the same thing. The other stuff is, the detail of it, but this is what you need to understand when you're in a range. And when people see this, is search and destroy. Now they're using a peacekeeper on search and destroy. It's the same stuff each and every day. Same stuff. BL2, the greatest. Yeah. I used to run with rapid fire and quick draw. What? Throw some Bettys around too. Throw a Betty right in the middle of the two buses. Nuketown. Duck down below the car to the left. I know it's risky. Somebody could blow me up there, but more than likely somebody's gonna clap running through the middle of the bus. First one, got him. Put it next to the car as well. Throw the other one by the mannequin next to the car to the right. Blew up the car. Two of them was crouching next to. Oh, got him. Yo, it was strategic. I was strategic with Yes, I wasn't the Russian. You see, I'm a Russian black. I wasn't that person. I wasn't that person. You get me mad, I'm gonna take out the 100-round clip, the LSAT, and now I'm gonna be upstairs cooking everybody with the long range. With the 100-round clip. You guys will die and come back 3 times before I run out of bullets. Because we playing on hardcore. Don't you... Yo. I was always the thinker. Wherever I died, that was a chance to change whatever it is that would happen. If I went to the right and I was getting cooked on the right, if I went to the left and I was getting cooked on the left, I had to figure out how to operate within that. Because some teams were camping in the back. Some teams end up having one person watch the left, another person watch the right, 2 in the back, and then 2 rushers in the front. Man, I had a whole team, a whole clan. It was Jag at the time. Yo. But I had to put those video games aside because it wasn't paying me no money. I'll tell you the first imbalance, watch that. The large imbalancer, first imbalance put a new high. So oh no, it already did. Right there. I didn't notice that. You see me tap right into it with this 1139 candle and then 1140 candle rushed up above that previous high. There. But this is still zones, right? Or even this. This is on a higher time frame. I mean, a lower time frame. Sorry, we tapped into the 50% of it. If you go to lower time frame, you see that this is a closure up here, right? 50% above 50% of the closure right here. What do you end up getting? An exact tap into the 50%, right? Sorry. An exact tap into the 50%. Bam, right there, right in the bottom. Validation behind here. Stops already at break even. 1-to-1. 1-to-1. Give me my money. But all of this is going to be too fast for you if you don't back test. Because I promise you, go to your guru, furu, muru, whatever you want to call them. Go to them and this type of price action right here, They're having a very, very difficult time. Very difficult time being able to trade something within this. The whole time we talk about the down candle and 1-to-1 up here, and still expect the price to trade a little high up to here. But what happened? When did that happen? 10:30. We began to accumulate. Now, every other day that we have marked out, the run for price action, you got 10:30 there. Above that old high there. Accumulate, right? You got 10:30. There. Above that old high, right? Begin to accumulate, right? I could go on forever with this, but if you don't back test, you're not going to be able to, comfortably take part in any of this because you chasing the busy. Was the hour and 32? So let me end the recording and upload.